Good morning, active trend traders. This is Dennis Wilborn from the Active Trend Traders. You can reach us at activetrendtrading.com. Today we're going to go over beware the bounce. Just a quick note that all materials here are presented for training purposes only. A couple of days ago I presented a video that talked about staying away from falling knives. And when the knives are falling, it's not time to be trading. And I wanted to cover today, beware the bounce, because oftentimes if the market is going into correction and is selling off, it will reach a level of support, do a weak bounce up, a brief and insignificant recovery after a steep decline. And it will bounce back up. Some people call this a dead cat bounce. Now, I'm not going to say that it is a dead cat bounce for sure, but still, beware the bounce. What's interesting about the dead cat bounce, the thought behind it, originated back about 1985, is that if you throw a dead cat from a high enough height, it will have a small bounce. Now, I know that's a little bit disgusting for if you're a PETA kind of person, but that's where the term originated. So let's take a look at the market real quick and see what's going on. And this is the Russell. And as you can see, with the Russell, let me get my drawing tools up and operational here. With the Russell, 2 days ago, I was talking about, 3 days ago, so I was talking about falling knives, is these big long candlesticks, bearish candlesticks were showing that the market was falling fairly quickly. And then on Tuesday this week, we start getting a little bit of a bounce. Bullish Harami on the Russell, bounce back up to guess where? We keep hitting on this, right up to the trend line. A correction, up to the moving average. And then what do we have today? We have a reversal, and it's heading down. What does this tell us? It tells us, for one thing, while past corrections in the market, at least over the last couple of years, have been short and shallow, it appears that there's something different about this correction that's going on. So far we've had one leg down, two leg down, 3 legs down, and we may be heading for our 5th leg down. Where's a logical place where we could potentially stop and turn around if we break through the 1130 level? Well, we have the 200-day moving average coming up, and it hasn't been hammered down yet. But there's some interesting things that are going on. Notice how the 50-day moving average is basically flattening out here, across here. And the shorter term 20 and 8-day moving averages are rolling over. So does this mean we're going to continue on? Well, we're coming to a very critical juncture right down here at about 1130 on the Russell. And if that is busted, then we're probably going to fall to the lower level. Let's take a look at the NASDAQ. NASDAQ, similar type of thing, right at the lower level of this upward trending channel that has been in place for a little bit over a year now. It has a little bit further to fall, but a similar type if we do get an acceleration down. And one other thing I'll point out to everybody is that look what's happening down here with the stochastics, if you follow the stochastics. What's happening is we get a little bounce up. However, with these type of indicators, the stochastics, if we are going into a more significant correction, they can stay along this lower reversal line for a long time and turn over and fall back below it, indicating that the weakness in the market. And oftentimes when we see the markets doing this, we'll see some of our favorite stocks also doing the same thing. Qihoo has been a really big favorite of a lot of people over the past few years, but it had a big sell-off the same way as the market. And look what, if the market were to close right now, we would have a bearish engulfing. And where did we almost get to? We almost got to this downtrending resistance line, downtrend line, if you will, and that it reversed off of that earlier this morning, has now fallen. Are we going to retest back down here at the 83, correction, 83.92 level, or the 200-day moving average? Time will tell, but it definitely looks like it too bounced, and the cat maybe gave up its last life, and now it's rolling back over. So we don't know for sure if it is a dead cat bounce. It's looking a little bit like one, but we'll have to wait until after the pattern completes to know for sure that we had it. And that's the way it is so often with a lot of technical patterns. The last thing is basically, it's really unfortunate. Yesterday's signal didn't give us a really good signal to get short on very many of these, except rolling down from resistance up here, and then on the intraday chart over on this side, you can see that there was a possibility to get short on some of these, but I like to do my trading off the small bodies on the daily charts. So that's it for our tech tip today. Again, right now it's appearing that the cat is dead, but we'll know a little bit more by the end of the day. Thanks a lot for joining. Bye.